Yolanda, we saw a bit of a pullback on the markets yesterday, down 1%, and after a poor start this morning, we seem to have levelled off and headed up, but investors do seem to be becoming a little more cautious after the strong run that we have seen.
Yes, Stephen, we saw the open, we opened lower, and that's just following international markets. I think some investors, we saw volumes very low this morning. We did see a bit of a pickup at about 11:30. Investors really just waiting, looking for direction and nibbling. And I think investors are perhaps, getting into the market this morning, looking for £1, £2 bounce intraday. We saw some investors coming in on Anglos, buying small portions, and hoping to get a £2 or £3 bounce there. But really, the market's still looking for direction. A little bit positive, quite surprising. I think if you look at the S&P, the market's really looking forward to the beige numbers that are coming out this afternoon, and possibly hoping that those numbers are going to be positive.
Well, Yolanda, as you said, the market looking for direction. We're getting the beige book out of the US Fed this afternoon. And of course, we're right at the beginning of the US earnings season, so I'm sure that's going to provide some direction to our markets going forward.
Yes, even that has also contributed, to the first time that the Dow has closed negatively. We saw Alcoa coming out, missing expectations, and then we had Electronic Arts, which is the PlayStation company out in the States that actually missed expectations, and really a lot of concern around that, and that's why the market, investors are Alcoa seems to set the benchmark for the earnings season, and I think that's what is driving the markets lower. So investors very cautious, possibly not taking long term and looking intraday.
And of course, those Alcoa results out late on Monday night. Earnings per share of 1 cent, and that was against expectations of 6 cents. So missing quite a lot on the earnings line. The top line growth was good, and really in this earnings season, are you going to be looking for strong top line and bottom line growth from companies?
Well, I think, Stephen, one in terms of the results, one has to look at where the earnings are coming from, because we had last year's season with expectations that they've cut a lot of costs, job cutting. They need to see real earnings coming through, and unfortunately, the start of the season has been as such that they've already missed the mark, and we potentially will see that coming through, and that will disappoint investors.
Of course, that Chinese news yesterday also causing some consternation in the markets, and the fact that it is raising its reserve requirements for banks, which means banks are going to really be able to lend less money, and that having quite a big effect yesterday on commodity stocks in particular. I mean, should this be a concern at this stage?
I think, Stephen, when one looks at China's been talking, we've had a lot of news out in terms of the China bubble, and I think the government there has become very cautious in terms of inflation, and it really looks like a move to tighten up liquidity. And investors are starting to speculate that possibly that we could see an interest rate hike fairly soon in China, following from Australia, and that's really the concern that's driving the markets at the moment in terms of demand, because we see China as the economy that's possibly going to lead the global economy out of recession. That it would be a concern.
Of course, here in South Africa, we're having an interest rate decision sometime this month. Manufacturing data out yesterday, slightly better than expected. It's a contraction of 4.7% for November. And of course, the market was looking for a contraction of about 5.7%. We were chatting to Rob Towell, your colleague, yesterday. He said worse than expected manufacturing numbers could have been the swing factor for an interest rate cut. What's your view now on interest rates when our Reserve Bank sits?
Nedbank's views that we're possibly going to see an interest rate cut only in 2011, and those numbers quite nicely coming in, supported by our exporters in terms of the cars, and which has really been supported by the cash for clunkers program. Unfortunately, if you look at the numbers, the production for the retail market has unfortunately not come through, and we're seeing the consumer pressure, and unfortunately until we see the consumers coming back into the market, so unlikely that we're going to have an interest rate cut for the year. an interest rate increase for the year, and only possibly in 2011.
Yolanda, Shoprite trading update talking about consumers. Sales up 11.9% for the second half of last year, so that includes, of course, the peak Christmas period. We're expecting other retailers to start coming out with their trading updates in the next week or two. Your view on Shoprite's update?
Very good set of results. In terms of their local, very surprising at 14.6. Obviously, the currency exchange on their non-SA earnings coming into play there. I think they're going to be under pressure in the next 6 months. They're possibly going to have food inflation come all the way down to about 3%. Still a very good set of results. They over December, they really went into the market, were very aggressive with their marketing, and that's really paid off for them. They've increased their market share by 2%. If we look at the other retailers, I think JDG is probably going to disappoint. PIK will probably come in line. We might be surprised with Woolies. So I think a fairly good season for our retailers, but one should remain cautious in terms of earnings for the next 6 months for them as they come under lower food inflation pressure.
Yolanda, just looking at the broader markets, what would your expectations be going forward from here?
Stephen, I think if one looks at the all share, we saw it run about 54% from last year's lows. The current PE is at 17.7. The average mean is at 14.4. And if we see corporate earnings not following through, I think investors have been over optimistic in terms of our earnings season. So the first 6 months of the year are going to be very important. If we don't see results coming through, we could see a bit of a pullback. So caution for investors in the first quarter at least, to see if companies do follow through with earnings.